Hi there. As we navigate the world of investing, bonds often come up as a topic of interest. So today we're going to talk a little bit about what bonds actually are and how they fit into a balanced portfolio. Now, when you buy a bond, you are lending money to an entity. It could be a company, it could be a government. In return, they promise to pay you interest periodically and then return your principal at the end of the bond's term. Now, that was a total oversimplification. Just like any other kind of investments, there are a wide variety of kinds of bonds. There's different taxation on them, there's different terms, all different kinds of things. So we're keeping it very simple today and just looking at it on the most basic level, lending money to a company or government and receiving interest payments during the bond's term, and then at the completion of that term, receiving the principal back. It's important to remember, though, that bonds can be impacted by interest rate fluctuations. We've certainly seen that significantly over recent years. So, the relationship between bonds and interest rates, when interest rates increase, the value of bonds decrease. So as interest rates increase, new bonds that are coming out are paying those higher interest rates. So we think about sort of the competition between the bonds available on the market. People are wanting those higher interest rates, right? And so it's kind of like a seesaw. So the higher the interest rates go, the lower that existing bond value is going to decline. Now, this is not the same kind of movement that we see in the stock market. And I think in particular, with the recent years and the volatility we have seen in the bond market, a lot of folks are getting a little bit confused about the dynamics and the impact on the bond market in particular. So as part of our financial empowerment series for Domestic Violence Awareness Month, I want to really emphasize a well-rounded approach to investing. And while bonds have had their moments of volatility, they can provide some counterbalance to some of the more unpredictable nature of stocks. And it's really just about that diversification piece. So when we think about bonds and bond diversification, we're looking at different terms on those bonds. We're looking at different kinds of bonds, different credit ratings of bonds. So there's a lot to consider in terms of making sure that you have a broad allocation and that you don't have too much exposure to one area of the market, the bond market, the stock market, certain types of bonds, that kind of thing. It's always essential to stay informed and adjust your strategy based on your specific needs. And so for some people who are really looking to generate income, a lot of times they look to the bond market and those interest payments as a way of generating income. So it does just depend on what your needs are, what your investment objectives are, how conservative or risk averse you might be, or how comfortable you are with market volatility. Bonds can be a valuable part of a portfolio. And so it's important to understand how they might fit into your investment strategy and to be very selective and specific on how you might use them. Now, if you found this introduction to bonds to be helpful, I'd encourage you to subscribe and share this video. Together, we can grow stronger in our financial journey.